all right, everyone. Welcome back to another session. This is the Trader Investor. We're doing our weekly analysis. Where did the market come from and where are they heading? It's been a pretty interesting couple of weeks. We keep discussing about areas where markets are consolidating and then what action are they taking. SPYs, we see clear indication of that. So we can even extend this box that we drew last week. It keeps extending, right? You can see it. Price is playing within this box. In the Qs, we don't see a very strong box where price is consolidating because we're seeing some deeper pullbacks, right? But even with the deeper pullback, as we keep talking about the fib retracement, we're not in our sweet spot of green to green zone, right? We're still at the 23.6% retracement. That's, to me, that's not a retracement. It's just a blip, right? So we keep doing that, as a refresher. We can go back. There is nothing that penetrates 23.6, right? Nothing penetrates that. We keep making higher highs, and we have higher lows along the way. Once in a while, we get this lower low, but this lower low in the grand scheme of things is still keeping that bullish momentum intact. Last week, when the NFP report came, even prior to that, when things were a little bit shaky, different conversations about interest rate. They're gonna cut interest rate. No, they're not gonna cut interest rate. Oh, there's some indication that they might cut it. They might raise it. All of that nonsense always happening, but institutions want us to believe one way or another, so they keep driving the price in the direction that they want. So if you look at the Qs, now we've had quite a bit of interesting pullback to the 23.6. That's it. After that, price reversed. But keep in mind, this green zigzag that we drew last week said if price comes down to 23.6 and reverses up, which is exactly that's what happened, right? Now that we know, we can put the turning points exactly where we see them, right? Now, this has happened. What we have to pay attention to now is, are we going to get a flag, railroad tracks, hammer, inverted hammer, or an engulfing candlestick here to drive the price down? Because that's what we said last week, right? If price touches at 23.6 and makes a lower high, and we get a good candlestick pattern, then we're going to play to that green zone, right? We participate in this drive down. There was no reason to enter here because it did not give us that risk reward we were looking for, right? This would be kind of chasing it from all the way from here. If you didn't enter here at this gap and said, hey, this is a gap play, I'm going to take it. If you did not enter here, then there's no need to enter down here, right? Now we wait again. Now, if we get a nice gap down like this and we don't close that gap, fantastic. But look why I said if we don't close that gap. This is really, really important to understand how to play gaps. It's very, very critical to understand how to play gaps. If we miss this part, then our account is going to be wiped out. So we have this gap that was formed on Tuesday, right? Last week, Tuesday. Price gap down and it never returned. It just kept driving down. This is a beautiful play, right? Even if we say, look, I'm going to enter at the open. Halfway through the gap is my stop, right? We can do something like that. I'm going to enter here. Halfway through the gap is my stop. Because this is a gap play, right? So that like you always hear me talk about logical area, where is a logical place for price to reverse. If it closes this gap, this gap play is invalidated for me. So that's why we put it here. We give it a little bit of a breathing room. And now we, from our entry, even that first bar gave us our 2x. Excuse me. This is how we play this gap entries, right? When we say, hey, let's look for a scan for gap plays. This is exactly how we do it. If it gaps down, this is how we play it. If it gaps up, same way. And we protect it from the other side. So today, this is where it's critical, right? That's why I keep mentioning it, and we went through that exercise. So today we had a very nice gap down. We had it open. So I'm gonna draw it to the open. Yes, after the fact it's up here, but this is where it opened. It opened. If we excuse me, if we enter at this gap down, thinking this green zigzag is about to take place, right? We made a lower high. It's about to take place. Fantastic idea, fantastic entry. Nothing wrong with that entry. But as soon as this first hour says, hey, I'm not going down actually, I'm going to close this gap, we're out. Right? There's no hopium. We don't hope. We just see the trade, we take the trade, and we close the trade. We don't lose because now we're seeing this gap down. So if we don't take this exit, and we're trying to go for our 2x somewhere here. Is our 2x, right? If we're going for our 2x, and look at where the position is, it has lost significantly, right? And it has lost all the way up here, but it actually got stopped out here. So this is how much we lost on this position, right? Per share. If not, if we have our stop too far up here, we lost 3 times as much. Yeah, I don't want you to do that. Why? Because this is a gap play. This is not, hey, we're in our zigzag, is going in our direction. No, it's in our zigzag, yes. Lower high, as we said, yes. But we also have this gap play that we have to be very careful of. And we talked about a lot of gaps, and gap trades is not something that we spend a lot of time on. So when you're taking a trade, gap down like this, or even if it's a gap up, another scenario right here, it's beautiful. Actually, this is another good example that worked as well. So as soon as price opens, you have this gap, and if you take this trade, halfway through is your stop. Beautiful trade, right? Beautiful trade. It worked out, but doesn't mean they always work out, right? Like this time today, we saw if we have a runner, then this trade is at, right now is at almost 8x, right? This trade from Monday. This is how we play the gaps. Now, in this case, we're saying, hey, it came down to 23.6, just like we expected it. It might still go down, but it's giving us, a run to the upside. I'm very careful, right? I'm very careful because a lower high could be formed. So even though this is a beautiful trade to take, we're very careful on where it could stop, right? It could, even here, it could just pop a little bit and then reverse immediately on us, like it did this morning. It actually did not even go, let's just change this to, let's say, a 15 minutes chart, see what happens. So if you look at the 15-minute chart, it formed an inverted hammer. We said, woohoo, I made the right decision. I'm in this play. but it barely moved from our entry. Really, barely moved from our entry. So this is open. This is actually the open here. So it opened at 401.91 and the low was 401.71, right? 20 cents. It barely moved in the direction we wanted to go, and then poop, it went the other way. So that's a big loss there unless you played the gap down play. Just wanted to show that. But today, where we are today, it is still possible we're going to go to the downside, right? It's still possible. I'm not saying it's going to happen. It's possible, so we're careful. I didn't get a nice green to green entry for that green to green play, but here, if we get a nice rejection when price enters and closes this gap, if we get a nice rejection, we're going down, right? We're going down for two things. Now this gap is no longer valid, right? It's taken care of. This gap down from this morning, but we still have this gap down. So that's the first place where I'm going to consider taking an exit if price does not slice through here. If it just stalls and if it doesn't slice through here, I'm going to consider taking an exit. This gap is right below a previous demand zone, but this demand zone, as you saw, really wasn't a strong demand zone because price, when it came down to that zone, it didn't reverse, right? It just kept slicing through it. It actually went way below it before price reversed. So this is really not a good, not this one, not a good demand zone. Regardless, we identify all demand zones because anything could happen. But here we have this really just as a demand zone here. We're on an hourly charts, hourly demand zone. We have this demand zone which is right below this gap. So if you don't want to draw this demand zone, it's fine. If you don't want to draw this gap, it's fine for this purpose because they're very close together. But draw at least one of them because price could stall. If I draw one, I always keep the one that is closest to the current price action. So this gap is closer, so that's the one I keep because that's where I'm going to be more cautious, right? If I don't draw this and I don't pay attention, like if I don't look left far enough, price might stall here and I'm like, why is price stalling here? Why am I losing my money? But that's why I like to keep the one that is closest to the price action. Right, so that's how it is. So today, what we drew last week is still intact. Now, this first one seems like wants to happen, right? This zigzag here. Because we came to 23.6, just like we said here. We came to 23.6. We came up here. Now, could we... So we have two scenarios, right? Two opposing scenarios. We have to look at which one is going to play in our favor, and that's why we have our stops really tight. One says if we get a nice pattern here, candlestick pattern, to go to the downside, the bears say, well, yep, I'm going to go to close this gap and I'm going to go for my green to green. The bull says, no, I'm just going to have a small pullback and I'm going to enter it to the upside once I finish this pullback. So both of them, from today's point of view, both of them are right. How you trade it is, do you take an entry here because you're currently you're bearish, right? Waiting for a nicer entry to be back to the bullish side. So do you take this trade to go to green, or are you that bullish that you say, I'm just not gonna take this small distance here, it doesn't make any sense to me, I'm just gonna wait for this reversal to go to the upside? Because the reason I say small, it looks big here, but what if that is just like this, right? So we don't know. We don't know until we're in there. So if your narrative says This 23.6 was it that it held. I'm bullish. I'm gonna take it to the upside. Then you're not taking this green zigzag bar, right? You're not waiting for that. You're not waiting to enter here. But if your narrative says, hey, I could potentially go down here because there's so many things happening, right? There's earnings that are starting to come around the corner, then I'd be a little bit more cautious. But either way, it's the right decision. You just have to play it accordingly. At the same time, one thing I want to mention is if you wait for the bullish reversal here and it doesn't happen, do not regret that you did not take this trade up here to green, right? You got to make the decision on which narrative you want to play and play that narrative. If you believe you can play both, that this distance is going to be long enough, you can take that chance. And I don't like to take that kind of chance because this could stop anywhere here, right? It could go all the way here, it could go up here, it could go here. I don't like to take that kind of chances, right? So here, from what I see, within a very strong bull market, we just had a shallow pullback. I think we're gonna see a slightly better pullback to enter at our green zone. With that, let's keep in mind on history because history lesson is good. We have a tendency to ignore history lesson, but let's keep history lesson in mind. So let's go to a weekly chart. I think a weekly chart is better. Okay. So the history lesson is from 2020, like at the bottom of COVID, to 2022, right? Actually, the end of 2021, we had a very nice run, right? A bull run that has never been seen before. I mean, very good upside. But what did we see from there? Lower highs. We saw lower highs continuously the whole of 2022, right? This is where we saw terrible things happening. So here, if we look this and this at a supply zone, is history going to repeat? Right? What we see here, lower high, is history going to repeat here? This is what we have to be careful of, right? Even if we are bullish, right? Even if we are bullish, we just have to be mindful of that possibility. We have to be very mindful of that possibility. Lower highs, right? Very, very mindful of that. Critical to have that in mind, right? Because same kind of setup is happening. Very similar kind of setup. Lower high, very obvious lower high is happening. That's why I'm more bearish because I'm seeing lower high. Now, if we get a nice gap up, close this gap, right? Close this gap and use that gap as support, then we can say, okay, we're not repeating 22. Until then, we played safe. Either side you played, you just be careful. Be careful. Now, one thing I saw that I wanted to mention is the spies never pulled back to the 23.6. The spies are staying in this box. Now, I've said many times, the spies never went below the 50% retracement. This is most current, but if we look here, from this move, if we look at that move, spies never went below 50% retracement. That same move in the Qs, right? We've said it many, many times. that same move in the Qs is actually 61.8. Right? So technology was the weakest. However, technology is still strong, right? We're making new higher highs. So the technology recovered very fast. Both making higher highs, but technology recovered very fast. So let's just keep that in mind as we look at our trades and our setups. And so before I move into anything else, I just want to ask, were there any trades that you have taken that we should look at? Okay. Okay. The Friday before, you mean? You got the railroad tracks the Friday, yes. And then when you gapped up, you took an entry. And where's your stop? Like this. Let's just make this. So your stop is down here, which is very logical. And then, so if you want your 2x, now we're somewhere up here for our 2x. So your stop is up here? Okay. Oh, your take profit is here. Okay, got it. I see. Yeah, it's again, this is exactly what we talked about earlier, right? If you see a gap, that could be the first place where price has a hard time, right? This definitely. So, yes, it's not 2x, but beautiful strategy, beautiful thinking, because if this is where price stalls, we will take our exit. Half of your exit or all of your exit? Okay, sure. Yeah, I like to put my stops once I take exit. I like to put my stops above my entry so that everything 100% of the position is in profit. That's just how I like to do it. But either way works. Now the this is I like everything about this trade. You thought about it. It's near the 50% retracement, and you had railroad tracks, and it gave you a gap up. You took that trade. The one thing I want to encourage you to do and not have any fear is if as you approach you gotta take this like day by day, right? Don't just take this statement today and just it applies every day. No, you gotta take it day by day. If price slowly approaches your this gap, then taking that exit as soon as you touch makes sense. But if price approaches this very fast and you don't see any sign of reversal, it just keeps slicing through it, then maybe what you could do is move all of your stop way up here, right? And then let it ride. Right? That's just a possibility. I think your exit. I'm not suggesting your exit is wrong. I'm just trying to see if we can capture slightly more if price is showing acceleration. Like if it has momentum, uh, by the time it hits the brakes, it might still go a little bit of a distance. Right? So if you see that a sign like that, maybe, right? Just something to consider, right? Because price could do that. But like I said, if price is slowly moving to this area, then if you don't see any strengths in the action, then and also look, your average volume uh, is way higher than current volumes, right? So we're not really trading at average volume. So take all of those things into consideration. But this is a nice trade. Now, as price gets closer and closer to your entry, do you move your stop or do you not move your stop until you get to that exit? To your exit. If it gets closer and closer to your exit, do you intend to move your stop or do you just let it sit here? Okay, yeah, I think moving it closer to your entry as price is hitting, you know, making higher and higher moves, I think it's a good idea. But never make it too tight to where the price action has no breathing room. Right? Where it's at today, I wouldn't move the stop yet. I need to see it move up. Because right now we're just still very close to entry. Yeah. But what I don't get is okay. Yeah. We're still in profit. So yeah. But nice trade. Nice trade. Yeah. Uh, let's just go real quick and look at uh, pre-market gap ups, see what happened. These are some very good learning, teaching moments. Price, okay. Now, this doesn't show any gap, but if we change to 15 minutes, or let's just change to 5 minutes, this morning, there you go. This is the danger of gaps if you're not playing them right. So actually, if at the open, here's the gap. Here's the gap at the open. So if you say, wow, this is a beautiful runner, I'm going to take this right at the open, and then boom, it closed the gap and then some. Right? That's why I say halfway through the gap is your stop. Sometimes, occasionally, you'll see it goes slightly halfway through and then reverses. I'd rather take that stop loss here and re-enter if I see a nice hammer forming. Right? Because otherwise, this is the risk that you're taking here. All of this distance. I don't like this distance. Right? That's why the 60 minutes, the 1 hour chart, is not very good to see that. Of course, when you're experienced, right? It opened up here, so I know this is the whole thing is a gap. I don't need to go to a 15-minute or a 5-minute chart because I know from the high of Monday, right, close the last bar, to the open of today's bar, that's the gap. So boom, that gap was terrible. That gap was terrible. Let's just slightly move this up so we can see. anything else that happened today. So here again, same kind of scenario, right? We had a gap up, but that gap was immediately closed. So maybe in a 5 minutes, you can easily see it. So Monday, Tuesday. So you see this very small gap up, right? You might even have like to really see it. You got to go to this 1 minute time frame. 6:30. Even the 1 minute is hard to see because from the close to the open was this small gap, and then boom, it collapsed. Right? It collapsed, and that whole gap is closed. Right? This gap here. You see how much away from that gap we went? That's a big loss here. Yes, take the loss, re-enter if you are comfortable with the rest of the setup. I don't see any reason why I would re-enter because everything is lower highs. It just got up, made lower high. There was no reason to enter this trade. Like hindsight, you'd say, "Oh yeah, this trade works," but there was no reason technically to enter this trade. And even that gap up was immediately closed. Right? So again, we use that for our lessons. Match. What did match do? So here's match is if you entered Monday evening, yes, fantastic trade because it's still up. But if you're doing that gap play that we talked about, gap play, because the gap is when we opened up here, right? As soon as we opened, that's the gap that was formed. But look, that gap collapsed. It didn't go back and fill the whole gap. It doesn't matter because this trade is a loser. That's why if you take this trade, you only take it if it goes to the upside, right? I mean, you keep it if it goes to the upside. It doesn't go to the upside, there's no need to keep it. Yeah. What gives me an indication to play to the downside, right? It's a good question, but here you say, okay, it opened and it only went to the downside. The way, okay, I've done that before, but the way I do that is in a much lower time frame. In a much lower time frame. So if I get 2 consecutive 5 minute bars, I'll just use the second bar high as my stop and play to the downside. But I am no longer interested in trading 5 minute bars. That to me, that's just too time consuming, and I don't have any interest in that. But the other thing you can do to play to the downside, which one was it? Where I think it was this one. Yeah, I think it was this one where we said price, everything lower high, right? Everything lower high. Everything is showing you lower high. This is the one that we went to the 1 minute. Yeah, yeah. Everything is showing you lower high. In that scenario, as soon as price opens, you might try to go to the downside because it gave you a lower high. Again, this reverse, right? So trading is not 100%. But so that's how I would do it if I want to do it to the downside. And this one is an interesting one from a trade perspective. Let's say you saw it in the morning. As soon as it opens, you take this trade. Okay. Now, if you're quick and you take it at the open, what happened? it made a $2.57 move, right? That 1 hour, and then boom, nothing after that. So it was pretty much flat for the rest of the day. Yes, it's not a losing position, but it's a flat position. So here's our entry, here's our exit, and if we look at our 2x is somewhere up here, right? We didn't get any of that. We didn't even get 1x, right? Because this is 1x. We didn't even get 1x. Price kind of, and then it kind of stayed flat. Yes, those who have position from the night before are sitting pretty. But if you're doing the gap trade, then it doesn't make any sense. Okay. All right. I think we have a good day today. Let's wrap it up for today, and we will discuss again next week.